so much for joining us.
Thanks for having me.
Yeah. So I know you're going off to Switzerland in just a few hours, so we'll try and get in as much as we can while we're here today. Paul is a partner at Pantera Capital, and I'll just give a little brief of Pantera is the first US Bitcoin investment firm, leading blockchain investment, and one of the largest institutional owners of cryptocurrencies. So, Paul, I have tons of questions for you. I'm going to start at the basics. We have quite a range of audience members here today, from those who are just starting in the space and interested in learning more, to those who are already deep in it and wanting to get more knowledge and connect with the right people and learn from you. So, Bitcoin's price volatility is all over the place. There are tokens coming out, coming faster than I can make my breakfast. So let's talk about, start with the basics. Can you explain the difference between coin, token, and altcoin?
Coin, token, and altcoin. I kind of just put them on the same bucket. Sure. I'd say that I guess one way to look at it would be coins or tokens that are for technologies that are looking to sort of facilitate smart contract development or infrastructure protocol, things that are making smart contracts more scalable, things that are making transactions more scalable, things that are improving upon privacy of blockchains. And so those are what we call protocols. And tokens are more representing digital assets and value that's sort of being created and transacted on top of these protocols. So I guess that's one way to sort of differentiate the two. I'd say a lot of investors right now are investing at the protocol layer, knowing that for a lot of these applications to exist and function well, we need to be able to have blockchains that can scale. Pantera has invested on both sides of the table.
And why does this all need to be on blockchain? Where does that come into the picture?
Yeah, the blockchain provides decentralization and immutability. So, for us, we believe that with decentralization and immutability, you get transparency and automation, and what that means that no central party can actually sort of control what's going on. And without that control, that means that transactions and things can happen in a peer-to-peer way and in a trustful way. And when that happens, then you can remove the intermediaries and actually save on fees. And so for us, we think that that is huge, because there's so many different companies right now that are taking unnecessary fees. We can actually do a lot of the things that we're doing in a trustless way, without these intermediaries.
And trust is such a big, important part of this, and really necessary for it to work. But that's also one of the things, ironically, that people are scared about in figuring out how to trust.
Yeah.
How do you respond to that?
Yeah, I think in an industry in which everything is just so early and the momentum is just kind of gone off the charts, and people haven't really realized what to do with this momentum. And so I think the best thing to kind of figure out on trust is really do your homework and figure out which people are getting backed by credible investors, and which people are being known to be doing the right things, and following those guys and seeing what they're doing. So I think that's the biggest thing, is just do your research before putting any capital into the space.
Who do you follow?
Yeah, I'd say I definitely respect all of my colleagues, for sure. We feel like we hire the best, and I respect all of their opinions. Also, all the guys that I do deals with, I have learned from them and have really been able to see what different insights they bring to the table. And then, of course, other guys that I haven't worked with but that have been successful, either as entrepreneurs or as investors, I follow those guys too.
So then we're going to get a lot more into that, but before we jump to that, you started off your career creating analysis-driven data models, and then you went into the world of ventures, and now you're here in the blockchain space. So what do you think has helped you most along the way to be as successful as you've become?
Yeah, so I've had a roundabout way to get into venture, and I feel like this is a pretty cool forum to kind of get into it. I mean, usually I just kind of dive in and talk about blockchain, what it is, and what makes it so exciting. But to get into venture capital, there's no real like straight way to get into it. I mean, you can go through and become an investment banker, and then you end up on the sort of growth stage side of things, or you become an entrepreneur. I've had a bit of both in terms of my background. I mean, I started off as an economic consultant, doing a lot of data analysis and data modeling, and then I kind of took that over to helping some startups, sort of scale in terms of business development and growth. But there was an in-between period there where I was unemployed, and I was kind of looking at whether I should go into finance.
That's the San Francisco way, though.
Yeah, exactly. It's like, I feel like that's the way to go. Just kind of take a step back and, feel like you kind of are in sort of a dire situation. You kind of have to figure things out, right? And so it gave me a chance to kind of figure out that, hey, I want to, now that I'm in like the lowest of the lows, like I can take a chance and try to do something different. And that's why I started working at a startup and taking a chance over there. And then luckily I saw a position that I can join as a venture capital analyst. And I didn't know anything about venture capital, but the more that I read about it, the more that I thought, hey, well, if I could look at something or look at a bunch of different companies on a high level and really learn about one ecosystem. At that time it was mobile. This is in 2010 when I don't think there were any mobile apps that had over 1 million downloads, and I was like, this small device is going to be extremely powerful. All the data that I can collect, I think this could really replace your computer and even become its own platform. So, I joined the fund and really just kind of hit the ground running. And so,
So tell us about Pantera and so Pantera's vision is, within the next several years, we envision blockchains and digital currencies having an established, responsibly managed, which I have questions about, and regulated role in the global economy. So what is that? What do you hope for and what are you imagining? And then we'll talk about some of your investments.
Yeah, with Pantera joining 5 years ago, I took a chance. So I think the big thing was that sometimes you just have to take a chance and stick with it. There are many times where I was thinking, hey, blockchain is not going anywhere. All the different promises that we've had along the way just haven't been fulfilled. And so for us, now that we do have momentum where, we're seeing a lot of entrepreneurs come into the space, Pantera's vision is to continue to build investment products and succeed with those investment products. So think of us like a Goldman Sachs or a BlackRock for crypto. Whatever type of investment strategy, whatever type of asset that comes up, we want to be able to provide investors the exposure to that. And the really unique thing about Pantera versus other funds is we kept our minimums really low. So actually, anybody can invest. It's almost like we're doing an ICO ourselves, even though we're not really doing an ICO. But that's pretty cool. Like we have 750 LPs. Like that's decentralization compared to any other venture capital fund.
Wow, 750 LPs. And so LP is limited partner.
Yep.
And those are the people who are your silent investors who are behind you.
Correct.
Okay. And what does that base look like, and what are they looking to get out of their investments, other than, of course, a return? But what else?
Yeah, those investors are mostly high-net worth individuals or entrepreneurs or people that work in tech companies, and some family offices too. For them, it's not a large percentage of their net worth, and they just want to say, hey, well, we think this is interesting. We've seen the asymmetrical returns that you can get from cryptocurrencies. From 2014 when I joined until now, the market cap of cryptocurrencies has gone up 30 times. So there's been some pretty good growth in a few years. And these guys are saying, hey, well, put a single-digit percentage of my net worth into cryptocurrencies. If it goes to 0, I'm fine. I can still survive. If it goes to 100x, then I made the right bet. So they're looking for financial return, but they're also looking for education. Pantera has been very transparent in terms of providing monthly investor letters. We do quarterly calls where it's like an AMA. We'll sit there, we'll give a presentation of what's going on in the ecosystem, and just like what we're going to do later on, people can ask whatever questions they want regarding the ecosystem, regarding specific investments, etc. So we want to be as transparent as possible.
What kind of investments are getting you really excited lately?
Yeah, it's been great to be in this ecosystem since the beginning. In the beginning, I would say that we had theses around how do we get, buy, store cryptocurrencies, and that was really easy to execute. You just go out there looking for the Coinbases of different geographies. and those have all turned out really well. Had a couple of theses around what were going to be some of the initial use cases. We were right about cross-border payments. Cross-border payments using crypto is hitting about hundreds to billions a month in cross-border payments using cryptocurrencies as a whale. So,
what are some of the uses that are being? So, what are some of the use cases you've seen?
Yeah, so we're seeing remittances. People sending money back to their families, not having to go through Western Union and pay 5 to 10%, wait 1 to 3 weeks. That's one specific use case. Another specific use case is around business-to-business payments. Guys like TransferWise, they use banks and they use floats, but to use cryptocurrencies to send money between thousands of dollars to hundreds of thousands of dollars without faster, cheaper, more transparent, that becomes really exciting. I think for us right now, we're focused on more infrastructure. That means that we need blockchains to scale, and we need consumers, developers, and institutions to have ways to get into this ecosystem, and that could mean fiat on-ramps into decentralized applications. That could mean...
Can you explain that?
Yeah, so if you're going to go and purchase some rep for Augur. Augur is a decentralized prediction market, and rep is the cryptocurrency that helps govern the ecosystem. And so if you want to purchase that, you have to buy Ethereum, maybe download MetaMask, which is like a plugin, and there's so many different steps. Well, what if you could just transfer money from your bank account and just get cryptocurrency right away and go directly into a wallet that's already been created for you? There are companies trying to solve that problem. Think of it like a Stripe for decentralized applications. That's completely needed, in addition to just figuring out how to build better UI, UX. And then on the institutional side, I think right now we're going to see a ton of speculation from institutions, and so we need custodians to kind of come into the picture. Fidelity just mentioned that they're going to custody cryptocurrencies. We invested into BAKKT backed, which is started by the parent company of the New York Stock Exchange, and they're going to provide custody. So things like that where institutions aren't going to get in until all of this is solved.
So as an investor, you talked about how, online you've talked about how you like to do all kinds of things, from just like figuring out initial strategy to getting down, and if there's an operational thing that needs to get done, you just figure out a way to get it done. So can you walk through what your day-to-day looks like?
Yeah, so...
Or just what one day may look like.
I'd say I can break down my main activities into probably 3 different functions. One is helping portfolio companies. And of course, I'm on a couple of boards, or 2 or 3 boards, and also some board observer seats. So those are the ones that I have to pay extra attention to. So that means like weekly to bi-weekly calls, and really just talking about the numbers, talking about strategy. Really just depends upon what stage that they're at.
And so I'll direct it, maybe a more direct question for the audience. Some already have investors, some are looking for investors. How should they work with their investors, and what should they be expecting? Is it any different than going to another VC, or are there some differences here?
Yeah, I think the difference with Pantera versus other VCs is the fact that we really understand the technology deeply, and it starts with having Joey Krug on our team, who's written more smart contracts than most people, and having built one of the top decentralized applications out there. And it also starts with me and Dan having deep finance experience, being at Tiger Management, CFO, and head of global market trading. And then myself having sort of done more deals and helped more companies than probably anybody in the last 5 years. Invested into about 90 blockchain companies.
And an acquisition.
And helped facilitate that Airbnb acquisition of ChangeTip to traveling all around Asia to make sure that Asia and North America, that's kind of where all the blockchain activity is happening. So making sure that Pantera has the top brand in Asia, so anything that comes out of there, any need that any corporate portfolio companies want in terms of connections to Asia, I can provide.
Well, one of the most exciting things about blockchain is that there are so many different applications, a lot that we haven't even discovered yet. So it's still such a nascent environment. And you, even in your past, you volunteered and were on the board for Grameen, helping with banking across borders, and I kind of feel like it just went right into this. And so on that end, we have, given your desire to give back to the community, what are some social impact applications for blockchain?
Yeah, so, someone asked me what I think is sort of most rewarding in terms of investing. It's investing into the emerging markets. And luckily we've been able to go out there and make investments in Latin America, Africa, and Southeast Asia. So I remember going out to the Philippines and really just kind of seeing how broken the banking system was over there, and that one of our companies was helping 5 million people unbanked get banking through use of cryptocurrency and blockchain. So I think that's a great way of giving back to the communities, basically funding all these companies that are helping the unbanked have financial freedom. Second of all, the blockchain provides a lot of transparency, so every single transaction that happens, you can actually go back to the blockchain and see where it is. And so donations, that's an area where it's pretty opaque. People say that they donated, but who knows, right? So if you can, you can actually have a service where you can actually track donations on the blockchain. That's a great way to just kind of prove that people are donating and just kind of make sure that things are being done the right way on that side.
And so you've been talking about working in Southeast Asia, Latin America. You've also been speaking around the world. What are some of the trends you're seeing outside of the U.S.?
Yeah, so speaking of scams and bad actors, there's a lot of them outside the United States. I get pitched from Russia all the time about all these ICOs that really just there's nothing behind them. In China, it's crazy. VCs are telling all their portfolio companies, hey, do an ICO. This is non-dilutive financing. It's gonna be great. You'll be able to get some money and have runway. So I think that's the thing about outside the United States is regulations are a little bit more opaque, and there isn't an SEC that's really drilling into penalizing companies. So that's one thing to really kind of watch out for. Is there's a lot of pump and dump schemes outside the United States, and that's why I think it makes sense to have a lot of local partners whichever geography we make an investment in. We make sure we have a local partner to say, hey, have you heard of these guys? Are these guys legit? Do you know anybody that knows these guys, etc.
Okay, and that is what kind of helps you. That's really the local partners you rely on to help you weed out what's a scam and what's not.
Totally, yeah. Local partners that you trust, local partners that have been vetted, and guys that you enjoy working with in terms of doing deals.
All right, great. And let's see. So I want to open it up and save some time for questions. So I'll open up the floor. Just to raise your hand and say your name, a little bit about you, so people can get to know you, and then your question. Yes, go ahead in the back.
My name is Joe Laughlin Whitman. I'm a member of Calvin. I've been a member here for 3 years. Came from Silicon Valley accelerator program. In any regards, really enjoyed my time here. It's been great that the blockchain and IBM and the ICO space is really growing here and manifesting its own right. But on regulatory matters, me who has built currency, really cares about it, is working with the SEC, wants us to be a world changer. What are your thoughts on the court's rulings on crypto becoming a commodity? For me, I see that as a huge advantage. Do you feel like that? How do you feel like that affects the momentum where you're going, with your investments or with what you're looking out for? Because that's a pretty big thing in terms of how we can kind of define, where we are with this new currency. I think it brings a lot of clarity. So, what are your thoughts on that?
Yeah, so I think that is a big step. I think that's better than what we've seen in the past, and I think with regulations, I just had a long conversation with Cooley, one of our, we have many legal attorneys. Again, there's no cemented right way to do things. There's no cemented, this is what it's going to be, and it's smart to, and especially for entrepreneurs to do the same thing. Just be able to have a stable of vetted, trusted resources that you can get different opinions about. And I think for us, we're going to continue to stay close to regulators and learn about what is the right way to do certain things right now, and what are things that sort of might happen in the future. And so I think that's one step that's happened, just almost like saying, hey, Bitcoin and Ethereum, they're not securities right now, or securities can potentially go back and become non-securities, and that kind of gives hope to the way that the SEC is thinking about things. So I think you just have to be close to good legal counsel and continue to just kind of see how things evolve.
Hi, so I work at growth at Google. That's my day job, but I kind of dabble in investing and trading in my spare time. I'd love to just hear your perspective on valuation. So coins, really difficult to even conceptualize some of the value. Do you have any frameworks in thinking about how to value coins, how to value protocols?
Yeah, I think if there's a token that's sort of being used to represent fees, then you can almost do it at DCF to kind of see what the value of the company should be at this time, especially if it's sort of out there. But
DCF discounted cash flow.
Yes, exactly. And then outside of that, the advantage that we have in terms of helping to price deals, especially since we're leading deals, is that we see a lot of companies in this space, and so we can kind of see which deals are being done and what type of companies, what stage they're being done at. And so comparative valuations is one thing that we use to make sure that we are pricing things at the right level. And then in terms of whether to do the deal, then we look at certain public comparisons of what type of spaces, what type of companies these guys are trying to achieve later on. And some of these public comparisons could be ones that are already on secondary markets, or they could be compared against like an Uber or Google, and we try to see if we get sort of a high enough multiple that makes us excited. At the end of the day, it's more, they mention this all the time, valuation is more of an art than a science. So it's really just kind of using as much data as possible, but then also understanding how much leverage you have too. That's kind of more from a private investor side, but of course, if you're looking at it from a public investment, you're trying to look at cryptocurrencies already on secondary markets, then you just try to dive into as much data as you can.
Hi, my name is Chivas, and I'm a developer working on blockchain applications. So just going back to your observation about end consumer adoption of blockchain, if you look at, for example, the personal computing era, that was driven through spreadsheets and word processors. That's what drove the average person to start adopting PCs and Macs. What kind of applications do you think are going to be the word processors and spreadsheets of the blockchain environment?
Yeah, so I think even before applications gain any traction, again, it's how do we easily find applications? How do we easily get onboarded into applications? And things like Wire, for instance, which is like a stripe for decentralized applications, helping people easily buy and get into cryptocurrencies, and make sure that you don't have to go through all the hoops and hurdles of maybe buying it through Coinbase and then trying to transfer over and go through certain other wallets to get into the cryptocurrency. I think that's the most important thing, is around on-ramps and also UI, UX of these decentralized applications. But I think the types of decentralized applications that are going to gain traction earlier rather than later are enabling things that you can't do right now that you can do with blockchain. And that could mean around gambling and gaming. On the gambling side, gambling is a heavily regulated industry, and certain areas of the world, especially the United States, you can't actually gamble online, or you can't do prediction markets, or you can't do certain derivatives, etc. Or in the gaming side, because people are experienced with virtual currencies, things like non-fungible tokens, which is sort of a representation of physical asset on the blockchain. People can relate to tokens a little bit better because of just what's going on with like virtual currencies and loyalty systems in the gaming space.
We have time for one more question, and then there will be time at the end too.
Paul, first of all, I have two questions. How do you pronounce your last name? I think we're all over.
It's Veradittakit, like a drum roll.
Veradittakit. Got it. Thank you. The question is, you said earlier you can imagine other entities coming in for regulation and oversight. One of them obviously is the SEC. Do you have any predictions or comments about that? We know that it's coming.
Yeah, I'm not going to comment too much on SEC stuff and things that things that I'm not certain about. But from what we see, it looks like the SEC is taking at least a methodical approach on how to regulate the space. I think their goal is to protect consumers, so they're going after really obvious, non-legitimate ICOs, and then from there, they've gone out and talked to investors. I think Mike Arrington has mentioned that he's gotten some subpoenas here and there, and so they're definitely talking to investors, talking to projects, and really trying to understand the space before really coming up with a framework. They may not come up with a framework for years, and You know, I was talking to some of the other investors in the space. This is an opportunity to kind of go forward, you know, get good legal counsel, but, you know, continues to innovate, and this is an opportunity for us to continue to push the space forward in the light of vagueness from the SEC. And when they finally do come out, you know, it could be years from now, then we'll kind of adapt to that.
Okay, great. Well, thank you so much, Paul, for joining us, and I'll bring you back up at the end.
Thanks, everyone.